Hi, everybody. It's great to be back at MP, and thanks for joining us today. My name is Matteo Gamba. I spent the last 15 years scaling fintech and e-commerce, different platforms across international markets. And that basically meant having to deal with a lot of payment stuff, and a fair amount of complications, and a lot of complexity as well. And that's exactly what we are here to talk about today. Merchant payments are often described as complicated, but in reality, they're mostly complex. And complexity isn't necessarily a bad thing. In many cases, it's actually where the differentiation and the competitive advantage comes from. So the goal of this panel, and we're going to have 5 great panelists, is to unpack a little bit that idea from a few different angles. So where really the complexity in the merchant payments ecosystem comes from, where the industry may have made things a little bit more complicated than necessary, and how merchants can actually turn that complexity into an opportunity. So this conversation will also set the stage for 2 very interesting keynotes that will follow. So make sure to stay in the room, which will explore another dimension of this evolution, the rise of agentic commerce. And we're going to look at also what happens when the customer is not necessarily a human anymore. So to explore all of this, joined by a fantastic group of speakers across the entire ecosystem, please join me in welcoming Adam Davies, Director of AI at Forter, a company helping merchants prevent fraud, optimize payment processing decisions, and enable trusted agents to pay. Fabian Music from Shopify, as EMEA Head of Solution Engineering. 𝗊𝗰𝗮𝘆𝗺𝗃𝗀𝗃 from dLocal, enabling companies to accept local payment methods across the world. 𝗵𝗂𝘆𝗺𝗃𝗀𝗃, sorry, CEO and co-founder of BrainStack, building and scaling global digital subscription products. And last but not least, Mikko Rikkinen, who leads financial services at Wolt, the on-demand platform for restaurants and retail delivery. So let's get started. First of all, is the framing right? Like, payments are complex, but they are also more complicated than they have to be. Is that the right way to think about stuff?
So I think you said it already, Matteo, you framed it right. We need to separate those 2 words. Yes, payments are complex. They are inherently complex, and that's not going away. But I don't think they have to be complicated. In fact, when they are complicated, that's usually just bad design. At Shopify, our CEO and founder, 𝗊𝗺𝗃𝗃, says we make the important things easy and everything else possible. So the idea for us as a company who does payments, not only commerce, but payments at its core, is to abstract that complexity away and do the heavy lifting for the merchants and give them all the complex things, cross-border, local payment methods, taxes out of the box, so that they have a certain level of standardization they can rely on, and at the same time have the flexibility to customize to their needs. So I would answer the question, yes, payments are complex, but they don't have to be complicated. They should be easy.
Baba, what's your take on that?
I think that payments start usually as super complicated in every vertical you start. And I do not believe that there is like a universal approach to any market. There are like travel, e-commerce, subscriptions. As long as you're starting, it's always complicated. And when you're proficient enough, it all comes to complex solutions inside of your vertical. For us in subscription business, it's all about micro improvements of our LTV, and billing is a huge part of it. So I could say that right now it's not so complicated, but it's complex in its solutions. And we, there are a lot of companies here at MP, my friends from product companies around the world, they are all looking for solutions that can improve 3–5% of their business, which is not complicated at that point, but it's a complex solution that can add something to your business model.
Yeah. So each of you operates in a different layer of the stack. And Baba, you started talking about subscriptions. Can you talk a little bit, each one of you, like where does the complexity really lies in your segment, in your part of the processing chain? Maybe Adam, if you want to start.
Sure. So I think, I mean, we sit primarily focused on how do we manage fraud and solve for trusted identity decisions, as well as how do we then optimize for payments and the performance and cost of that payment processing. And when we think about where the complexity lies in that mix, it's really around collecting and processing all of the data and all of the signals that you have available to actually arrive at a simple decision that is the right answer for your business from a strategic perspective. So whether that's risk, where we might be looking at 6,000 data points for a given transaction around behavior, cyber intelligence, and what we know about that identity, there is a lot of complexity there. That's a lot of data points to be looking at. And it's a critical question. Do we trust this individual when we're actually assessing that data? But it needn't be complicated for merchants. Like our job as vendors in the industry is to ensure that we're packaging up solutions that bring all of that capability and bring the sophistication to deal with that complexity so that from a merchant's perspective, it becomes actually simple to manage. And I think an example of where that's maybe not been the case in identity is things like merchants having to manage large rule sets and constantly fine-tune those rule sets. And we're moving now towards something much more automated. And I think automation is going to be a key theme that you'll hear from all of us today around how do we address this complexity and ensure that it's not complicated.
Thanks. And Juan, like from your side, there is a lot of complexity around the world. How does that translate into real-world practice?
Okay, we do something different. No? So we operate in very specific markets, what we call the south of the world, Latin America, Africa, Middle East. So when we see that, we see markets that they have their own central bank, their own payment infrastructure, they work in a different way, their own currency, their own legal taxes requirements, whatever it is. So at the end of the day, let's say we have this complexity in the last mile. What we see is that there are many merchants that get complications when trying to build, let's say, different bridges to each of the different markets. So they take one market, they do one funnel. They take one market, they do one funnel. We, as the local, we try to reduce that in a way that we do only one channel to everyone. We try to standardize and reduce these complications. So at the end of the day, on our end, it's this last mile because of the nature of the markets that we live in. But as Fabian was saying at the beginning, also complexity is good. In a sense, I mean, in payments, complexity has to be good. Complications are not good, and we need to work to reduce that.
Miko, you also work in many different markets. How much of these translate into your day-to-day work?
Yeah, it's actually really interesting to listen to this because Wolt, as many of you know, is a large company. It's a multi-sided marketplace in more than 30 markets. That's the starting point, and then there's 150,000 courier partners plus 70,000 merchants, 20 million euros users. So it can easily get really complicated. Like that's the starting point. But basically, what Wolt realized relatively early on already is that we need an e-money license. So Wolt kind of tried to find, went through this complicated or complex part to avoid later on the complications that would follow, and gained the license. So it covers, let's say, a baseline. But at the end of the day, it's the consumers that decide. So when we are looking at different markets, so Nordic markets, certain kind of payment methods, and then you go to, let's say, Southern Europe, what was discussed here, different kind of payment methods, and we also provide cash payments in some markets. So it can get mixed up in a really easy way. So what I'm looking forward for our discussion is that maybe there's an opportunity to find somehow like a baseline and then build up localizations on top of that one. I think that's basically where I'm coming from.
Yeah. And Baba, you built your proprietary payment orchestration. Was that a decision to reduce complexity or to own it, or like what was your thought process in that journey?
I'm into subscriptions for 10 years already in product management and building products that scale all over the world. And what we saw is that marketing costs are only skyrocketing every year. I think there is no people in the room. There are no people in the room who saw like, oh my God, my lead costs so lower this year. So it's usually a skyrocketing graph. And that's why the answer to it is improving your parts of your businesses. We're talking about products, about our funnels, and especially about payments. I can say right now that payments are like 51% of our success in this market. And that's why and a lot of companies in subscription business, in product subscription business, they build their own solution in order to maintain their ability to survive and ability to build more and more products. Because you're now battling for not dozens of dollars, not dollars, you're battling for cents. And you're battling for in every possible region. Like and you can use dLocal in South America. You can use, of course, like big providers, which we all know in the US. You can use special banks in Europe in order to make your LTV higher. And building your own system inside it's a matter of surviving right now for us, because the third-party payment orchestration, of course, I admire a lot of them, but they are into everything for me. Like they're building different types of orchestration for different markets. And that's why, for me, I need something that is built solely for subscription. That's why we came here.
And there was nothing on the market that could fit your needs?
There were some solutions. And these are great friends of mine, and I admire them a lot.
Great. Juan, for you, a lot of the complexity comes from the fact that in emerging markets, the alternative payment methods is actually the dominant one, right? So what does that tell us about the industry mental models?
Okay. So for me, that's, let's say, one of the topics that we talk a lot and one of the favorite topics that we have now, because when we talk about alternative payment methods, alternative to whom? Yeah. To us. I mean, from my perspective, I'm Spanish. I grew up in Spain. I've been paying with my card, not even credit card, debit card mostly. So we were used to pay with a plastic card. Now it went to the mobile phone. But when we're trying to sell to Africa, I don't know, we go to Brazil, we have Pix. We go to India, we have UPI. We go to Africa, most of the sub-Saharan Africa, they have mobile money. These are not alternative payment methods for them. These are local payment methods. So at the end, this complexity relies in not checking or not seeing these markets from the distance. It's understanding as well, okay, how do they pay there? And if I want to sell, not pushing my reality, but let's say what they have. So it's what I was mentioning, no? So at the end, it's kind of doing this bridge and leveraging the knowledge that players like dLocal or let's say these local players can have by doing things locally. And I don't know, myself, I was traveling a month ago. I went to the Philippines. And there were many places in which I couldn't pay with my credit card. So at the end of the day, they have a wallet there that is GCash, and the Filipino pays with GCash. They don't pay with a credit card. So if I'm trying to sell something to them, and I'm offering only cards, it will not be possible. And this can be replicated to any other market in the regions, let's say, that are not Europe and the US, let's say, Latin America, Africa, and we can do it like that. But we could talk about this for hours.
You see a lot of this as well for Wolt, right?
Yeah, I just wanted to say that that's my daily life as well. This struggle. Like I thought I've been for quite a while in this fintech space, and I thought I knew quite a lot. But there's, for example, local payment, exactly not alternative, but local payment methods of using in even Europe that I was not even aware of. And I only understood it once I kind of saw that, yeah, that's actually, I don't know, 80% of the market is paying with these local payment methods. And I think those should be also respected in the future, because it's the consumer or the user at the end of the day is the one who is deciding. One thing actually what I wanted to bring into the discussion was also what is easily forgotten when talking about payments is also what happens underneath, so to say. So from like Wolt's perspective, being this multi-sided marketplace, you know, settlements are often an issue. So you can open the door to the local payment methods, then you get the money in, but basically what happens after that one? And I don't know if you guys have thoughts on that one.
I think it speaks to broader consideration around reconciliation as well, right? If we're especially thinking about it from a merchant's perspective, there's so much complexity in payments, but by necessity, right? The complexity is good. Complexity gives us choice, right? If it was super simple and then there was one vendor for everything and one payment method, it probably wouldn't work anywhere near as well. Complexity enables that flexibility around what the customer wants to do and what they need to pay. But I think when we think about the necessary kind of features of solutions, it's about abstracting that complexity in the clearest way possible from a merchant's perspective. And to your point, Mika, when we think about the kind of behind-the-scenes flows and what that means for a merchant, reconciled understanding of my data, a reconciled understanding also of my customer, right? A single customer, a single identity could shop with you across multiple devices, multiple channels, multiple payment methods. If they're a customer that regularly travels, they might be shopping with you across multiple geographies. And so understanding the full context for each of those interactions, right? I can look at an identity and understand how do they interact with my business? What's the full context of this customer relationship? The only way that you can enable that is with tooling that helps you to abstract this complexity, to reconcile that understanding, and to have access to that in one place.
Yeah, I would like to double down on that. When a lot of complexity happens when, or complication happens when we try to solve shopping problems on a payments level. Like the payments layer is pretty simple in a way, right? It charges the money, charges the card and moves money. And it doesn't know if an item is out of stock, if an order is not correct. So if you send a broken order to the payments layer, it fails, it gets declined, right? So the cure here is to have a commerce operating system like Shopify that has the entire context of the buying journey, and where you can ask questions like, is this trade even legal? Is this item available? Is it in stock? Is the shipping address correct? Is the discount calculated in the correct way? So when you manage to solve that, all that shopping logic upstream, the payment simply goes through. So what it needs is really this one unified platform, so that you can check the commercial logic and the mess never hits the payments.
It feels like a lot of the complications come from people not necessarily doing their homework to understand where the complexity lies, in a way. And I like what, Mikko, what you said when we were preparing, that complication is what happens when you layer vendors and workarounds instead of designing proper infrastructure. So can you tell us a little bit who is responsible for that extra level of complications?
Yeah, I guess the owner is at the end the responsible one. But it's a really good question, and I think this kind of layer structure of services that we are seeing more and more is going to increase exactly the complicated part. And as we discussed previously, what every company within this space should find is exactly that, where do they position themselves? Because that's also then, in my eyes, that's also where your responsibility lies as well. So kind of from, let's say now, Wolt perspective, we can't do everything everywhere at the same time. It means that we will need partners. What we are now kind of trying to see is that what is exactly our role in this setup, and how much, to what extent do we work with different partners. We have really great partners, and many of them are here today. So hi everyone. But we can't obviously do it ourselves. But it's like an ongoing discussion to find out the borders that, okay, this is our role, this is our responsibility, and this e-money license obviously bringing a baseline to that discussion from our perspective. And
if you guys think about like the level of complexity, does it lie more on the back end, at the data layer, more on the front end, on the user experience? In your experience, where does this complexity surface the most?
I think from my perspective, and certainly through the lens of risk and identity management and payment optimization, a lot of the complexity sits behind the scenes. It's complexity that results from decisions a merchant is making about how they structure their business. So for example, if I as a merchant know that I need to have a presence in several different geographies, I need to choose a PSP that supports all of those geographies, or I could make the complicated decision and choose a PSP for each of those geographies. And there's strategic consideration there as well. So I think this is where, you know, it's beyond kind of front end and back end. There's then the strategic complexity of understanding other advantages to me as a merchant and my business of partnering with one PSP that can cover me globally. The advantage being, of course, that that creates a bit of simplicity amongst all of this complexity. But if there's a trade-off to that, which is that actually working with a local provider will give you better performance, maybe lower costs domestically, then that's a consideration for you as a merchant as to what strategy are you pursuing for your business. And the same extends into identity. Identity can be managed in a very simple way, which is, maybe I just mandatory step-up authentication via 3DS for every transaction, and in that way I'm shifting liability to the bank. I'm creating simplicity by following a strategy like that, but I'm not acknowledging where actually bringing some complexity to the mix serves me to my benefit as a merchant, which is that actually finding the right balance of identifying trusted, legitimate customers and giving them the smoothest possible experience through the remainder of the flow actually ensures that my abandonment is kept to a minimum, but requires you to embrace a little bit of complexity to actually have that dynamic real-time decisioning around when do I step up this individual or when do I not. Now, of course, we're here in Europe. Everyone in Europe is pretty capable at this because of PSD2. We've become very good at this over the last few years. But there are many, many examples, even beyond identity, of it's a question of, do I take the simple approach and how does that align with my strategy, or do I embrace a little bit of complexity and what value does that unlock for me?
And Adam, you talk about customer. And that's obviously where there is some level of interaction at the user experience level. But what happens when the customer is not a human anymore? We have bots nowadays. They maybe shop not even using a website. So what breaks in the existing flows, in the existing processes? How are things changing because of that?
Yeah, so this, I mean, agents and agentic commerce creates a fascinating new set of problems and, of course, new opportunities for merchants and vendors alike, which is that, first of all, the direct line of sight to the human is gone. It's broken. I have an agent intermediating that acts as essentially a smokescreen to a lot of the traditional signals that might help me to understand the customer and to validate the legitimacy of that customer when they interact with my site. Second of all, you have the fragmenting infrastructure for how agents actually interact with your business. So there's two, I would say, emerging categories of how an agent can behave. You have the scraper agents of the world that will try to render a website, maybe taking hundreds of screenshots, feeding it back to the LLM to interpret what it's seeing, and then trying to use a graphical user interface like a human would, but as a machine. And of course, I don't need to explain to everyone here why that's likely to have challenges. Websites and graphical user interfaces were not designed for machines. But in that scenario, it's a little simpler for a merchant because at least the scraper agent's interacting with your website, right? They're hitting your existing domain. And the question for merchants there becomes, how do I partner with my bot prevention service provider to ensure that, first of all, the good bots can actually get through the door to the website? And then second of all, how do I ensure that my identity solution and my risk management is able to understand who is the customer behind this agent, and is this agent acting with the authority of that individual to actually pay? In the second category, you have protocol using agents that actually bypass the website entirely. So you have the ACP protocol from OpenAI and Stripe. You have the UCP protocol from Google. I'm sure Anthropic is busily drafting their version of this. But of course, Anthropic has set the tone, I think, in everything that they do, that they are the slow, considered AI platform that comes a little bit later, but with something a little bit more full-bodied, let's say. And so that creates new complexity for merchants as well. If I want to allow protocol using agents to bypass the website and not run into those risks of having a scraper agent try to act like a human, then I need to support these emerging protocols to actually provide the infrastructure for these agents to interact with my business. And so from a merchant's perspective, regardless of which category we're thinking about, there's more complexity that comes into the mix, both in terms of how do they interact with my infrastructure and what do I need to build as a merchant in terms of new infrastructure. But second of all, in terms of answering the question, who is the human behind this agent and are they trustworthy? And of course, there's a lot of emerging standards and frameworks to manage this. But the challenge there is we're still at this point of divergence. And so as a merchant, it's getting more complicated by the day. There's more standards to consider, more integrations to evaluate. And hopefully in the future as an industry, we will drive towards convergence and alignment around shared standards.
Yeah, and I think we're getting into this conversation about AI. It's not just about the shopping experience, it's also how you manage things internally. And AI is meant to make things easier to build, but probably a little bit harder to manage as well. So that complexity might increase. Who's worried a little bit about the harder to manage part of the equation here? No, Vavan, you're not?
No, my take here is, I think, like I'm telling right now from the merchant side. Like, let's imagine you have any business, real business. Right now, to test some kind of solution on the market, it takes you so long time, like it's 3 months to just negotiate, and then you just integrate for a long time, and then it's like it's a massacre to understand, does it work for your business or not? Because all those complex solutions with anti-fraud or a chargeback resolution, all those solutions that are tested throughout the time. Right now, I believe that all those solutions can be tested and integrated, like on a run, like it can be simultaneously built. What can we see right now as a merchant, that AI agents and AI development, it like fastens the development in times, like it's one senior developer can make 20 times more than he used to make. So it means that he can integrate any complex solution from the payments like in a day, not in 20 days. And we can test 4 anti-fraud solutions. And we can test 5 different sources from chargeback resolutions. Or we can test any other stuff that is like something new, which market gives us, and gives us on conferences like MP. And the other side of it is building such kind of solutions. I truly believe that there will be a lot of very interesting startups in this room in a year. And this will be like new companies with like 10 people on their team, and they're making tremendously good products.
So are we going to see orchestration player going out of business because of... no.
We'll see.
It's going to be easier. No. And Mikko, from your side, how do you see this? Are there aspects that become more complex or more complicated?
Yeah, I was just listening to the talks and thinking about it, that it's well, the topic is, first of all, obviously everybody is talking about it, AI and so on. What is good to kind of keep in mind, and this is also a note for myself, because in my previous life, I studied actually AI in insurance. And back then I realized that like we always overestimate the short term and then underestimate the long term impact with any new technology that we receive. And basically AI had a similar kind of moment as well, that you basically, like everybody was thinking that chatbot, that will solve it all. Then it didn't, and then it kind of went down, and now we are realizing that, yeah, actually the models that are now in place are actually making a big difference. And one thing, what I actually read, I just recently heard a term, KYA, like know your agent. And I think that's actually for like a larger company as Vault, I think it's a good term for this internal discussions to have to kind of figure out like what does it actually mean. So we have KYC, KYB in place. Do we in the future need to have something like, I was just thinking of what Adam, what you said, that do we need to kind of see a KYA process for like know these agents as well and kind of build everything around that one. And I think that kind of summarizes the larger company's perspective to it. So you need to basically, in order to get there, you need to also get everybody else involved and find the way how to communicate it internally as well.
And Fabian, you call it a little bit this AI paradox where you increase the volume, but you also decrease the drag. Is that actually good news for merchants, or does it just move the problem upstream?
Well, it's both. It's good and bad, because as you said, on the one side, complexity is going to increase through sheer transaction volume. On the other side, like operational drag is going to be reduced. So what does this mean? It means we will have AI agents who are able to settle transactions in milliseconds, and they are already driving traffic. We can see across millions of stores we have on Shopify globally. AI traffic is increasing measurably, and that leads to new questions. And the big question is going to be, do you have the infrastructure to handle that traffic? No one has the crystal ball to know exactly what this is going to look like, but we need to have an infrastructure using the right protocols like UCP, which was announced by Google and Shopify alongside. And you need to have this infrastructure that is built for these non-human customers. And I'm going to talk in a bit in my keynote about how you can make that happen successfully.
And
at the same
think about this infrastructure part. I think an interesting point is that we talk a lot about cards, but we don't talk about alternative payment methods for agents. And that's where there is a lot of complexity there. So Juan, like on your side, like, do you see that conflict in a way coming up?
For me, to be honest, that's a topic that, let's say, if we go back, let's say, now we have a lot of people sitting here that works specifically on payments within their companies. Before, payments were managed by the finance team, and then became more complex, and they needed someone really expert in order to do it. Then the other part is technology moves super fast, infrastructures, they need to adapt as well. So at some point, everything will match, and let's say it's evolving. The only thing is that it will be like Boba was mentioning, and Mikko as well. Also, everything will be done faster. Then
is the industry talking about, for example, Pix being used by an agent, by an AI agent? Is that happening?
Exactly. But for me, let's say these payment methods that are not relying into all the infrastructures, most probably they will become available in quicker or faster than cards that will have, I don't know, depending on the type of payments amount, whatever it is, you need 3DS, yes, no, this market. So they have less complications by now because they are like one click, one QR code, whatever it is. So they might become available faster in this flow. Obviously, I mean, when we talk about this kind of payments, we talk from our perspective, as I was mentioning, is always cards. Card, as of today, is the main payment method worldwide in that sense for commerce. But still, there are certain payment methods that will be way easier to put in that flow.
And Adam, like a lot of the complexity at an agentic level is around authentication and identity. Have you encountered a conversation around alternative payment methods, or is primarily still around cards?
So far, I think, and we have to acknowledge that agentic commerce is still in its relative infancy, right? And so naturally, the incumbent players have been focusing on how do we solve the main established kind of global payment methods first, and that's of course where we've seen Visa and MasterCard building out their agentic network tokens. We saw Stripe partnering with OpenAI to create, shared payment tokens, similar concept but slightly different format. And interestingly, where we've started to see some of the alternate payment methods coming in is, for example, the X402 protocol from Coinbase actually floats the possibility of stablecoin agentic payments. And they are envisaging, agent-to-agent payment flows where agents are making kind of microtransaction purchases from each other. And in that flow, cards actually aren't very suitable because the fees, the minimum fees associated with processing a card transaction mean that if you're processing a transaction that's a cent or even less than a cent for these kind of agent-to-agent microtransactions and microservices, then cards by default won't be a suitable payment method there. So I think right now the focus is very much on how do we enable customers to transition from using their card in person or online to then giving it to an agent. But I think the stablecoin argument, BNPL, I think we'll start to see move into this space. And of course, the local payment methods. I think that's what we're going to see in terms of development over the next 12 to 18 months.
Thanks. And thanks for a great conversation. We are almost at end. So one last question. Like, if you had to pick one thing that the industry keeps calling as complex, but that you believe is actually just complicated and can be fixed, what would you pick? Let's start with Fabian, maybe.
For me, it's cross-border. Like, cross-border is something that has historically been used as a reason to build separate tech stacks, separate stores, separate payment architectures. And what we think merchants really need is a chameleon backend, which adapts to whoever the buyer is from where they shop. And that's actually what we built with Shopify Markets. And that is really an interface that depending on where the customer comes from, shows local payment methods, local currencies, local language, of course, local catalogs. But also in the backend, you have a unified backend where you can manage all these different markets, all these different regions with local entity settlement, local currency settlement, which helps the merchant to really get a best-in-class solution with best-in-class authorization rates. And that's something that the industry still treats as complex, but it can actually be really simple.
Nico?
Great question. I would say, this is also a note for myself as well, like KYC, like really a little bit going back to the KY, like if you really want to know your users and your customers, like you can do it. They are partners to do it. It's complex to get there when you have a lot of markets, obviously open, but it's not complicated. So that's my take on it.
Okay.
If you want to, you can do it.
For me, it's approval ratios all day. Right now, we have to put a lot of time and effort in order to get the perfect setup. And I think it's a complicated problem right now. In the future, it will be just complex.
Nice. Juan?
Aligned with Fabian, but from the PSP perspective, no? So cross-border. I mean, for me, most of the conversations that I have with merchants is, okay, I'm doing cross-border. I have Swift, I have international acquiring rails. It's like driving a car with a handbrake on. I mean, you will get to the point, but you will be slower. So at the end of the day, this part of, do I have to open a local entity, yes or no? Do I have to adapt to the tax regulations, whatever it is? So all the complexity, I mean, it's something that we as the local, we are doing it, but we know that can be, we can make it disappear. So it can be solved.
Yep, perfect. And Adam, I'm not going to ask you because you're going to have plenty of time to tell us about the problems and the complexity and the challenges and the opportunities in agentic commerce. So please join me in welcoming this wonderful panelist.